Hello, hello, hello. Today we're looking at GCSE Economics, money and household. So let's get right into it. Firstly then, this is what we're going to learn today. We're going to learn about money, banks, what they do. Look at those lovely money jars. I used to collect those as a kid, save them up, go to the sweet shop. Good memories. I guess that's going to happen less and less now, seeing as everything is digitized, isn't it? So, what happens without money? You'd literally have to go talk to the other person next to you and barter. This is such a pain because you require a double coincidence of wants. Very important wording in economics. This means I must coincidentally want the thing that you have, and you must coincidentally want the thing that I have. If I have eggs and I want beef, but the beef seller doesn't like eggs, what can we do? Without money, there'll be no trade. So you'd have to produce everything you wanted and needed for yourself, which is a form of high independence, but a real pain in the economy if everyone's a subsistence farmer. So normally what happens in class is people do an exercise where they have to trade these pieces to make a sandwich. And it just shows you a little bit about how ridiculous the barter system is. But basically what we need to work out is what makes the bartering system annoying and basically what makes money better. So, problems from just simply bartering with each other. I already labeled one of them if you remember. Fixing the rate of exchange. Who determines how much of one thing is worth another thing? It's a completely subjective experience without money being the middleman. Also, like I said, you need a double coincidence of wants, and this is a real pain. What if they don't want what you have to sell? Or swap? If you hold on to bread and cheese as an asset, it will go bad pretty quickly. So the value of that asset declines quickly. The question then is, how does money fix these issues? Well, let me show you by looking at the characteristics of money. So firstly then, money is a medium of exchange. No need to barter. And because it's accepted by everybody, you don't need the double coincidence of wants. Because everyone just wants that single thing, that delicious, lovely, juicy money. Next, a store of value. If you hold on to your money, it will stay valuable. That's not a long-term goal though. You need to be investing it somewhere because generally with inflation, money loses around 2 to 4% a year. In some crazy places right now, like in Turkey, inflation was around 50%. So that meant $100 that you had this year could only buy half the goods the year after. So that means if you had $100 this year, you could buy $100 worth of bananas. With that same $100 next year, you could only buy 50% of what you bought this year. Crazy. So countries really have to be careful about their inflation rates, but generally it's considered a store of value. It's also a measure of value. The way I think about this is it's just got a number on it. Look at that iPhone, a number, $500. So we know, according to this example, one iPhone is worth 2 Xiaomi phones. This makes life easier. You can easily compare the value of different goods. And finally, a standard for deferred payments. Look how happy she is with that credit card in her hand. Dangerous. Glad it's not my credit card. You can buy goods on credit. You can use your credit card, go to a shop, buy a phone, and pay back the company later. They pay for it for you now. So that involves a large degree of trust. So these 4 elements are really important, okay? So quickly pause the video, look at these 5 situations, and identify which of the 4 characteristics this money fulfills. Did you get it? The first one. Over the weekend, I went to the shops and bought a massive English breakfast. I'm giving my money to a different party, which means it's a medium of exchange, okay? I can transfer my money to them. They can transfer the change back to me. Next, the price, the label of the price. This is a measure of account. You've got a number value on the cost of this breakfast. Number 3, I go to the bank and I put my money in. Over time, it retains its value. Therefore, it's a store of value. And what happens with banks is they actually tend to pay you for saving with them. Why do they do that? It's because they can make more money from loaning out that money. 4, I agreed to borrow $1 million to buy a house in Chiang Mai. As we all know though, houses in Chiang Mai are not that expensive. Firstly, when we look at number 4, we need to understand that it's a loan. So the money you receive is expected to maintain its value, and the payback you give is expected to be more than the initial value you borrow. So let's say inflation is 4%. That means the value you give back to the bank is going to be lower and lower. So they need to make their interest higher than that, okay? So money is a store of value because if it wasn't a store of value, banks wouldn't give out the loan. That's the first one. But also it is a standard of deferred payments as well for number 4. Now, the thing about number 5 is it's a more clear-cut example of why it's a standard of deferred payments because it's simply expressing the loan. All right. Did you get those? Is that okay? Let's move on. Now, Another thing that's important in the examinations is the characteristics of money. Generally the physical characteristics. Let me show you them. And yes, you do need to know all of these. They are acceptability, durability, portability, divisibility, and scarcity. Let's go through each one by one. First, acceptability. Does the guy next to you accept it? In some countries, like Cambodia, they actually accept American currency, like dollars, over their own currency because they believe it to be more stable. In many countries where their economies are having issues, they tend to buy stronger currencies from other countries for safety. Durability. Can you carry it around? Is it going to damage? Is it waterproof? What I love about the latest design of bills is basically if you put your money in the wash machine, it doesn't get damaged because it's not always made from paper anymore. Next, is it portable? Is it small? Is it easy to carry around? Divisible. How easy is it to divide? Well, you can divide one British pound 100 times, right? But what about cryptocurrency? That can be divided 1,000,000 times. And finally, is it scarce? If it's just like rocks that are everywhere, it's not scarce, is it? So therefore, it doesn't have value. It needs to be scarce to have value. And that's why original money, the tenets of original money, were based on gold. They were backed by gold. And now it's no longer backed by gold, but you could argue technically it is because you can still buy gold with it. It's just the price of gold varies all the time. Right, so we've got the 5 characteristics and we have the 4 functions, okay? All 9. So here they are laid out in a really nice table for you, okay? So I have a task for you, okay? Pause the video and I want you to think about which of these characteristics Bitcoin fulfills. Okay, let's have a look then. Did you get all of these? So, is it acceptable? Yes. Actually, this has a bit of a caveat. It's mostly acceptable, right? Governments can be a bit picky or pernickety when it comes to Bitcoin. And also, if you buy Bitcoin, sell it for cash and then try to send that cash back to your bank, it's getting more and more difficult to do. So, I would say that acceptability is having a few issues now. I did do this a year or 2 ago. Durable. Absolutely. It's electronic, stored on multiple systems. Portable. Perfectly portable. The crazy thing about crypto is, as long as you know your seed phrase, which is your password to access the crypto, you can literally go anywhere. You don't need to carry anything in the airport. It's completely portable as long as you have the password. Divisible. Perfectly divisible. More divisible than money, in fact. Scarce. Yes, there's going to be a limited number amount. Store of value. This is where it gets a bit wild. The market is incredibly volatile. Just recently, it went up to $100,000 for one, and then went back down to $80,000 just as quickly. Crypto is an incredibly volatile space. Means of deferred payment. You can now slowly take out loans with Bitcoin. The problem is, when you take out loans with Bitcoin, you need collateral. So really, if the collateral is the value of the Bitcoin you're borrowing, then it's not really as effective as banks yet, but people imagine down the line that will improve. Medium of exchange, yes, mostly. It's mainly used to get money out of places and in places. It's not accepted as widely everywhere as most currencies. Saying that some currencies are under international bans at the moment, as we all know with the war going on. And a measure of value, certainly. And that measure of value changes every 5 seconds. So basically, Bitcoin does stand up to money, but it's way more volatile in its value and has acceptability issues sometimes. What about WeChat? Well, a lot of you guys don't use this in the West, but basically it's like Instagram or WhatsApp. It's basically a combination of Instagram and WhatsApp, to be honest. People use it for messaging and for pictures and updates about their life. And it also has stuff for buying things on as well. And you can send money between each other in group chats. And you can send red packets, which is like a distribution of money to anyone in the group chat. I was reading that the money they receive is stored in a specific account. And the money sent between each other is more digital than anything else. And they only need to release that when it's off the system. I'm not sure if that's changed in recent years. But does it fulfill all of these values? Absolutely it does. This new electronic form of money payments is the future. Now, we've got an interesting video to watch on prison ramen and whether that can be used as money or not, okay? So, jot down this table and let's watch the video.
Ramen. It's warm, flavorful, quick, cheap, and filling. Instant ramen. It's warm, flavorful, quick, cheap, and filling. It's the chosen favorite among college kids and inmates across America. Check usage reports from the Massachusetts Department of Corrections, for example, And you'll see that ramen was the #1 sold item at prison commissaries.
Unbelievable, right?
Ramen has become like cash among American prisoners, because behind bars, ramen was the #1 sold item at prison commissaries. Ramen has become like cash among American prisoners, because behind bars, it can buy you anything.
Anything that's got any value, from clothes, drugs, a favor. Hey, I like the way your penmanship is. Can you write this letter for me? Can you draw this for me? You know, anything. It's literally gold.
This is Gustavo Goose Alvarez. After 13 years in and out of prison, he literally wrote the book on prison ramen.
Ramen is the best and easiest currency because everybody uses it. That's everybody's staple to cook. You gotta have ramen.
Because prisoners can't possess cash, they use objects to trade for other goods and services. And anything that replaces cash has to be durable, portable, divisible into standardized units, and highly valued. Ramen fits the bill, because unlike other traded objects like stamps, which are expensive, and tobacco, which is banned in most prisons, ramen is cheap and easy to get a hold of. In the commissary, a single pack of ramen runs about 59 cents on average. But once it's out of the official commissary, ramen's value is determined by an informal prison economy.
They barter with it. They become jailhouse stores, so to speak. Like, guys would purchase all the ramen, kind of like that scene in Orange is the New Black. She took over the market.
Jesus, who put all the ramens?
Guys fill up their cells with this, and they have their own store, and then they put their price on it. Your ramen could sell for $2 to $3, believe it or not.
A 2016 study found that while a sweatshirt cost $10.81 at the commissary at Sunbelt State Penitentiary, an inmate could sell that sweatshirt for 2 packs of ramen, increasing the value of ramen by 916%. In fact, food items are the overwhelming majority of what people buy. An analysis of annual commissary sales in 3 states shows that 75% of spending was entirely on food and beverages. Inmates aren't just using ramen as cash, they're also eating it. Creative cooking in prison is a necessity. When asked if prison meals were enough to live off of, Alvarez said,
No. I think you would starve, literally. I lost like 10 pounds, because they give you a meal that's maybe for a 5-year-old, a 10-year-old, but it wasn't up to par. It wasn't your 4 food groups, it was none of that.
So ramen can supplement when the food provided isn't enough. With 2.3 million people in US prisons and pressure to cut costs, food is one area where federal and state governments are trying to save money. Some inmates are now being fed for as little as $1.77 a meal. In one instance, the Marshall Project reported that one prison had whittled down costs to as low as 56 cents a meal. But keeping food costs low doesn't come without consequences. Aramark, a private food vendor to over 600 correctional facilities, has been cited for giving inmates tainted food and serving fewer and smaller meals.
New information tonight about ongoing problems with maggots found in Ohio prison kitchens.
Issues like this with Aramark and other private food vendors have prompted civil lawsuits and protests in response to the state of food. Turns out, food isn't just about nutrition, it's also about security. Despite everything, ramen has become a way inmates keep a sense of control while in the system.
We would actually make a humongous spread, and these soups would be the equalizer for all of us to sit down and have a meal, and not stress on what's happening on the prison yard.
Trade and bartering in prison isn't new, but until there are systemic changes in its food system, ramen will likely stay at the top of the prison trade economy.
Right, that was a really interesting video, right? Who'd have thought it that ramen actually becomes a currency? Or should I say ramen? So yeah, this is a game changer. What did you get on this list then? Can you fill it in? It's acceptable, yes, everybody's eating it. They need it for calories. The food in prisons is taken over by large organizations that do a lot of cost cutting. They want more calories. It's acceptable. It's durable, yeah, because it's dried. It can be crushed up completely and still usable. Portable, mostly. It's pretty big though, isn't it? Divisible, absolutely. They could divide it by weight if they need to. Scarcity, yes. They only have so many in the tuck shop in prison, right? So you buy them all out, like I said, reduce the supply, bang, increase the prices massively and dominate the market. Lovely. Little prison monopoly. Functions of money then. Store of value, absolutely. It doesn't go bad. Or it might take a few years to go bad. Means of deferred payment. I'll owe you a couple of ramen later. Absolutely fine. Medium of exchange, yeah, a couple of packs of ramen for a haircut. And a measure of value, absolutely. It has a financial value and it has a nutritional value. Right, now we're over money. Let's crack on with banking. Commercial banks. What does a commercial bank do? Do you know? They're everywhere. There's lots in the UK. Can you think of any names? We've got Lloyds, we've got TSB, we've got Barclays. These are all commercial banks. And remember, commercial banks are private businesses, okay? They're the middlemen. They bring money and banking to people like me and you. So basically, you can save your money with them or you can borrow money from them. They are businesses. Never forget, they are profit seeking, okay? How do they get their profit? Mostly from loans and repayments. And stock market sometimes. They take your deposits in saving accounts. They lend money to you. So like I said, they make their money through loans. And when you take out a loan, you pay interest to the bank. So an example of this is, I borrow $100 from them. I must pay back $105 after a year. But if you put your money in the account, they might pay you 0.5% of the value of your money after a year. So there's a big gap between how much they pay you to take your money and how much they charge if you borrow from them. That's how they make money. So in the UK, these are the banks that have the biggest market share. Look at Lloyds killing the game. What I find wild about the UK is, I had a bank with Lloyds when I was a kid. Then it became Lloyds TSB. Then the government forced them to break up because it was too big a monopoly. And now my bank is TSB. And I must admit, my experience with TSB has been one of the most unenjoyable experiences of my existence. So thank you, TSB. The company that I didn't even sign up for. Crazy. So yeah, in the exams, they do talk about checks sometimes, even though I feel like it's a bit old school. And it's probably way before your time if you're studying GCSE right now. But basically with checks, it's like, I'm going to pay this person X amount of money. You give it to the bank, this piece of paper called a check. And then in 3 days, it gets taken out of your account and put into their account. All right, central banks. Now, one of my students referred to this as the Big Daddy Bank, which I found quite funny. So the central bank is basically separate from the government, but also intertwined with the government. It's the bank that basically controls, monetary policy across multiple countries. So in England, our Bank of England is known as the central bank, and that will control monetary policy, the supply of money in society. Big daddy banks, the central banks, they basically set the rules for the private banks, the commercial banks that we just looked at. They really care about keeping the economy stable, making sure if the private businesses, the commercial banks have problems, they can fix those problems. And yeah, generally controlling money supply. So here's a quick video to help you out.
Central banks. Believe it or not, they're really important to our everyday lives. Central banks manage the flow of money in a country's economy, so things don't go haywire. They're typically part of the government, although they should operate independently. The specific roles of central banks vary from country to country, but they usually have a few key responsibilities in the economy. So things do not, they're really important to our central banks. Believe it or not, they're really important to our everyday lives. Central banks manage the flow of money in a country's economy, so things don't go haywire. They're typically part of the government, although they should operate independently.
I like the way he says this. They should operate independently from the government, even though they're a part of the government. This causes quite a lot of problems down the line, because if the government wants to basically add money to society, they tell the central bank to do that. If the government want to sell some bonds so they can spend more in the economy, they tell the central bank to generate money to buy bonds from the government. It's a very internalized system where sometimes there's not a lot of transparency about what's going on.
The specific roles of central banks vary from country to country, but they usually have a few key responsibilities. Mainly, they're in charge of monetary policy to keep prices stable. One way they do this is through what's called the interest rate, which is the cost of borrowing money. Central banks lower interest rates, making credit cheap to boost the economy. Because when credit to buy things, such as homes, food, and cars gets cheaper, people tend to buy more. And who doesn't love that? But when prices get too high, central banks can raise rates, making money more expensive to borrow. This can slow growth, but it also brings down prices. Central banks also buy and sell foreign currency. They can do this to weaken or support the value of their own currency. Stability isn't just about keeping prices steady. That's why central banks also play a key role in preserving financial stability. For example, if a commercial bank is in trouble, a central bank can give them a loan, but only as a last resort. Central banks have been using all of these tools to help keep things stable for hundreds of years.
All right, I hope that helps somewhat with the understanding of central banks. I hope you're getting a firm grasp of the idea of the difference between central banks and commercial banks. So, central bank jobs then. Issuing money. They can literally create money, generally in partnership but separate to the government, as previously stated. If a commercial bank is having problems, a bank run, for example, that's where more than 10% of people say, I want to get my money now from the bank, which surprisingly doesn't happen very often. The banks often don't have that cash readily available. But what happens is, if multiple people identify that the bank doesn't have cash and they start talking to their friends, more and more people panic and start to withdraw, and that leads to massive withdrawals, banks having to shut down in order to stop people coming in. And then the central bank has to step in and help these banks out with liquid cash in order to pay the consumers and protect the consumers. I mean, most banks will have that money back eventually. It's just taking a lot of time for it to come back through loans. Because legally, for every $100 you give them, they're allowed to loan out $90 to $95. So they don't actually keep a lot of physical cash, okay? But yeah, the central bank's job is to help them out when they have troubles. They need to stabilize the economy. They lend to the government when the government has problems. Like I said before, the government sells bonds. And the central bank might just create some money, boop, and then buy the bonds from the government. This gives the government access to money they can use in society to create jobs or pay wages. The central bank can dictate to the commercial banks how much interest they should be charging on loans. This is called a variable rate. I don't want to get too deep into it, but basically they can make people that have loans pay a higher rate or pay a lower rate, which will either take money from people or put more money in people's pockets at the end of the day. And of course, the biggest target for the whole government is low inflation. They don't want the value of your money to go down so much. Let's say inflation is 2%. I have $100. I can buy $100 of bananas. Inflation is 2%, meaning that banana prices may have increased by 2%. That means next year with my $100, I can only buy 98% of the bananas I bought the year before. So it makes the value of your money go down. And yeah, the central bank want to fix unemployment and hopefully encourage the economy to have steady economic growth, increasing output, increasing GDP. Right, let's muscle in on the exam question, shall we? This is a real exam question from a GCSE paper. Explain how well money performs as its function. Explain how well money performs its function as a medium of exchange. Pause the video and have a go. This question, actually, I found was quite difficult for students. And when I attempted it as well, I found it was a little bit difficult. Because usually these questions have quite a firm structure, but the structure seems a bit of a mess with this one. So from this question, they wanted you to pull out the concept of bartering. So they wanted you to compare what bartering was like in the past and how money fixes that problem. I don't think if I took the exam, I would have been able to work that out, to be honest. So let's have a look at that first part of the mark scheme. It's just what I said at the start of the video. So 3 marks for general performance. It is more beneficial than bartering. It doesn't require a double coincidence of wants. And remember, this double coincidence of wants concept is so important. When you're bartering, you need that person to want the products you're trying to give them. If they don't want it, there's no deal on the table unless you find a third party to trade with. Money cancels that out. Everybody wants money. So there's your first couple of marks. So next for this question, even though it was talking about the functions of money, it wants you to pull in the characteristics of money. I expect so many students in the exams didn't do well in this question. But I can understand the argument here. It's basically saying It can only perform its function of a medium of exchange well if it fits the criteria of the characteristics. So, is it portable? Is it durable? Is it divisible? Is it scarce? For example, if it's not portable, like those massive rocks that are used as currency in some countries, then how useful really is it? If it's not divisible, like we saw in India where they got rid of the smaller currency, caused a lot of problems as they tried to get rid of the informal economy so people would start paying tax. Again, this is quite a strange mark scheme, right? Because this example here, it says money performs this function very well because it's advantageous compared to barter, is a copy of this statement here. So when I was marking this, I was trying to work out if I can double mark this concept. And finally, this point here. This is actually quite a good point, I think. It's what I was expressing to you earlier in the video. A high rate of inflation, like we saw in Turkey recently of 50%, means that your money loses so much value so quickly that it effectively becomes very difficult to function as a medium of exchange. People aren't going to want to exchange it if it's that badly damaged. They'll be willing to swap it for other currencies that will maintain their value. And actually, they could benefit greatly from this. If you buy dollars and then your currency free falls in the exchange rate market, you can then exchange the dollars back later and get more of your domestic currency. So some people hedge their bets like that. Anyway, quite a difficult question, and it looks at all the variables that maintain the idea of a medium of exchange. All right, question 2. Analyze the importance of a central bank in an economy. This is a nicer, more clear-cut, structured question, isn't it? Analyze the good and the bad, okay? Pause the video, have a go. Okay, so this is an analyze question. It's not a discussion question. So when we analyze, we tend to break things down a little bit. So what it's looking for basically is you say what the central bank does and you explain why that's useful. Okay. Sometimes with these bigger questions, we're looking for the other side. That's usually a discussion question. This is an analysis question. Okay, so let's think about how we can get these marks. So the first one will be for monetary policy, where they can increase or decrease the amount of money in society at the click of a button. That's what they do. 2 marks for just saying that they do that. You haven't even expressed the importance of it yet, but I'm sure you'd get a mark for that. Next, setting interest rates like we talked about before. This will determine how much money people have in their pocket at the end of the month, especially if they've got a mortgage on a house. And this is where we talk about this policy will influence spending and saving. And remember their macroeconomic goal, keeping inflation low in a country. And you see the explanation here, maintaining competitiveness. That just means that if inflation in your country is lower than inflation in another country, your goods will remain more competitive because a third country will buy from you instead of the other country. So look at this here. We said, and remember my students joke, Big Daddy Bank, okay? This regulates the commercial banks, okay? So, commercial banks must be pursuing sound policies. Remember what happened in America, the subprime crisis? They were giving out 105% loans on properties to people with bad credit. Meaning that if you wanted to buy a house, you go to the bank, no deposit, they'll say, I'll give you the total value of the house plus 5% so you can buy furniture in it. Later on down the line, these people move in, they can't pay the banks back. The banks lose a ton of money. The investors in these mortgage schemes lose a ton of money. It all collapses. Many people lose out in what used to be a stable industry. So now the commercial bank is like, whoa. You need to make sure they have enough money, they have stable jobs, they're going to be able to pay back these loans. So look at this expression of detail here. A lender of last resort. So we're explaining it stops banks going out of business. A strong banking sector is important. So you're explaining these details. You're analyzing the importance of it, okay? And we also know the central bank's a middleman that deals between these commercial banks to help them out with their transactions. And remember, they give loans to the government in the form of bonds, okay? So they're really essential for the government when the government's strapped for cash. So there's lots of different ways you can get marks here. Some students really fail on this point here. 4 marks for a list-like response. Make sure you're writing full sentences with explanations, okay? So at GCSE level, these are the simple points without explanation, and these are the richer points with explanation that tend to get you the higher marks, okay? So you can see in these mark schemes, there are lots of ways to get the 7 marks. So the more you write, the more varied the things you write are, the more opportunity you have to get grades. We mark positively, okay? So if you just hit any of these points, we tend to give you the mark. So, you know what to do. All right, that's it from me. If you're interested in any private lessons, just click the link down below. Have a great day, and I'll see you again.